What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others. So let's dive into Bitcoin here on the monthly time frame. The monthly candle closes in 8 days and 3 hours. I'm going to be interested to see how this monthly candle closes regarding the lower wick. If we get a longer lower wick, similar to last month's, it'll increase our chances that next month will go up and form a monthly, we'll go up and break the high of this month's candle, which will then make this a higher low. So that's what I'm going to be watching, is to see how that wick closes out for the monthly time frame. That's really the only thing I care about. After that, I'll anticipate something like this, where we come down, we come up, we form a lower high somewhere below this high here, because it's very unlikely for us to just go up on the first go and go up, 126%. It's possible, but it's very unlikely in my opinion. Therefore, where we will probably go will be, depending on where this monthly candle closes, either the R1 pivot up here at about 37.6, or the R2 up at about 46.3. After we form the lower high, let's say that we do end up forming it at the R2. We come up, we form it at the R2, and then we come down again. Now, are we going to form a higher low and then go up for a higher high, or are we going to form a lower low? I would venture that we're going to form a lower low. I would venture to guess that we're going to form a lower low. But that's just me. We'll see what happens. The reason is because a lot of people are still really bullish on Bitcoin, and not accepting the market cycle phase that we are currently in. And so I think that we could continue down. From a weekly perspective, this week we have a pretty decently bullish candle so far. Right now we're seeing that bullish volume here, which we said was likely after last week of the declining bear volume. We also said, over the past few weeks, that it's likely we'll form a higher low here versus this low here at 28,796. And so we'll see where the price ends up going in the next 2 days to close this candle out, and then see in the following week if we do end up breaking the high of this week and forming this higher low, and then potentially, like we said, forming a lower high below this one, like we've been talking about in the past videos. It's because of the magnitude of this drawdown, over 20%, I think it's likely that we come up, we form a lower high, and then we come down to form a lower low. I think that that's the way that the price is going to go, but we'll see, because it's also dependent on the monthly time frame. So we could end up seeing a potential for a lower high, higher low, and then higher high, which would be very good news for the bulls. And also consistent with what we're seeing on the RSI, which is right now a hidden bullish divergence, with the price making potentially at least making a higher low right here in comparison to this one, and RSI making a lower low right here. So we'll see if that ends up playing out over the next several days and weeks. Going to the 3-day time frame, this candlestick is very bullish right now. You can see we're coming into this white candlestick right here, which is our red resistance level. This other one right here is from the daily time frame, so let's take it off for now. Looking at this from a 3-day perspective, you can see that this is the main resistance zone from when we had our trend change here. So we had a high, low, lower high, and then lower low pattern. This is the bear trend that we're looking for. So now, once we see that, we know we have a resistance level right here, and that's what we're seeing right here. Now the question is, with this resistance level, is it going to hold on the first test, or are we going to blow right through it? So if we blow right through it and close 2 3-day candles above it, it'll be support on a retest. But if we do not, which is the more likely scenario considering the trend that we're in, this will reject down in the coming week, and we'll see the price trade down, potentially to form either a lower low below this one or a higher low. So when we're analyzing the price, one thing I also like to look at is the volume and the RSI. In this case, you can see the volume is increasing above average bull volume here, or not above average yet, but it's getting close. And then we have the RSI, which is right now a, let's see, 35.89, 35.48, yep. So we have another hidden bullish divergence. Well, this one's actually confirmed. So a confirmed 3-day hidden bullish divergence right here, comparing these two lows, which is potentially what's propelling price upwards right now. Let's go to the daily time frame and look at the other resistance level that we currently have. So the other resistance level that we currently have is, in fact, this candlestick right here. So this candlestick is from a bear trend, same exact thing again. High, low, lower high, lower low. 2 candle closes below the key low. Now though, if you look at this candlestick, we're actually trading above this candlestick's high right now, which is interesting. So if we end up closing above this high today, this high from July 18th, and then tomorrow we close above it as well, then what will happen is this will turn into a strong support zone for price. So we'll see what we end up getting here in the next coming days, but right now we have 2 hours left, and right now it's looking pretty good for continuation. I'll also talk about why it's pushing up still after we saw over the last 2 days declining bull volume. The lower time frames are looking very good for the bulls. So let's look at the lower time frames then. If we go to the 4-hour time frame, there's a couple things I want to point out here. First is this pattern right here, which is this inverse head and shoulders pattern, potentially. So this is what we consider a bullish reversal pattern. So when you see this pattern in price, where what you're seeing is a drawdown in price, okay, you could even consider this entire thing the drawdown in price. When you see this, what you can consider then is the price coming up to form a high, the price coming down again to form a kind of climax low. And if we look at the volume, we can see we kind of had that sort of climax low here with significant increase in bear volume in comparison to all of the other bear volume sticks, except for this one back here from like June. So if we're considering from this high downwards, this is consistent with the volume trend that you would need for this pattern. So a climax low, and then increasing bull volume coming off of that low right here. People really buying the dip aggressively to form the head of the pattern. So we have a left shoulder, we have a head, and now we have potentially a right shoulder forming. Now the confirmation of this pattern is what's considered a break of the neckline, which is where the shoulders meet. So if you look at a person's neck or a person's shoulder line, the reason they call this the neckline is because your shoulders, it runs into your neck. So when you're looking at this pattern, the neckline is the horizontal kind of level right here, where if we move this over slightly, you can see the price came up here on the left shoulder, we form this high, down. Right shoulder, we come up, we reach the same sort of level here, and we have a consolidation period. So we can just take this high as our neckline, and so that's our neckline. Now the confirmation of this pattern is a break of the neckline, a significant break of the neckline, and then with increasing bull volume, and then follow through to the target for this pattern. Now the target for this pattern is always going to be a measurement from the head up to the neckline. So if we take our measurement tool, we put on our magnet tool, we come down to the low and measure it up to this high, we have 3190. So now what you can do is you take that amount and you add it, for an inverse head and shoulders, you add it to the neckline to get your target. So we pull this up, we take our magnet, we snap it to that high, we pull this up to 3190. That's roughly about here. So it's about 35,600. So that's the target for this pattern if it does end up playing out. And curiously enough, that's right around these two equal highs, which I've been watching and have talked about on these videos before. This is what we consider a liquidity pool. So this is where people's stop losses are resting from people that went short here, or even potentially here. People went short here, here, or potentially here. So stop losses are resting above these highs. Therefore, if the price goes up to these highs, what will happen is people's stop losses will get triggered to buy their positions back because they went short, so they have to buy them back if they get stopped out. And therefore, that is creating sell-side liquidity for big whales in the market, people with large positions, to fill their positions without moving price significantly because there's a lot of orders coming in, stop losses being triggered, and then therefore the price will then subsequently draw down significantly after grabbing these highs. That is what I am looking for with these highs. I think that's what's going to happen. That's my personal opinion. But this pattern lines up very nicely with these highs. In addition, it also lines up very nicely with the Ichimoku Cloud Kijun level, which is right around $35,000. So, I'm not saying we're going to 35,000, but I'm saying that there's definitely a chance. And if we close today's candle above this high right here at, roughly 32,440 something, and then tomorrow as well, I think it's very likely that we do end up going up to those highs. So the other thing to watch in the 4-hour time frame, briefly, last thing I'll talk about is this support level right here. This is the support level that we have right here from our bull trend. Low, high, higher, low. Oh, I'm sorry. Technically, wait, here we go. This isn't even a valid level, I don't think. Oh, what's this high? 32,379. Nope, it's not. Okay, so disregard that. Our nearest support level then is going to be this candlestick right here, which is this level, which we've already tested once here. Came down, tested it, and had a nice bounce. This level is where we had our bear trend here. High, low, lower, high, lower, low. But then subsequently we pushed right through this zone without really respecting it. So when we retest it then, now it's support, and that's what we're seeing right here. So that's kind of what's kind of supporting price for the moment in time right now. So that's currently what I'm seeing on Bitcoin's price action. I hope this analysis was helpful for you in learning how you can start to apply some of these technical analysis concepts to analyze price action on your favorite cryptocurrencies and hopefully generate some profits. If you're just getting started in learning technical analysis, I would recommend our beginner technical analysis course that we released on Leutheria.com, and this is where you can get all of the foundational knowledge you need to get started generating consistent income trading these assets by learning things like volume analysis, how to read trends, candlestick analysis, and a bunch of other related concepts as well. So check that out. We're currently running a 20% off special for that course. And yeah. All right. Until tomorrow, onward and upward.